All right. On a dip, in fact, be a buyer. Jay, come in on what's really happened on the developments overnight. The import duty hike wasn't really needed. Nobody asked for it. It was only done to support the rupee. But of course, that has both positive and negative implications. So Dixon, Amber, of course, gained from it. Bata and the footwear pack is also doing well. But your consumer appliance industry already suffering because of weak demand in the summer season, high inventory, high raw material cost, and now sentiment hit coming ahead of festive season.
Correct. See, if you see from a market perspective, right, this has been a negative move. If you see capital goods or white goods companies, they have been already reeling under pressure. The GST, there was a torrential rain, so the summer did not set in. And apart from that, they have a huge inventory pile up. And, most of them are importers of materials, the major players like, Voltas, Havels, if you talk about them. So what will happen is, there is already a cost of inventory which would be there. That would again, create a pressure on the margins. And we don't know when the winter set in, the demand may not increase, and there is festive season nearby. And the higher oil prices and the way rupee is behaving, I feel that there may be a shift in immediate consumption. So that would again be a negative. But the step taken to curtail the rupee outflow. Hiking import duty, I think, may backfire in the short run for the economy.
So you think rupee will fall regardless of all these short-term measures? I mean, of course, the push and pull is stronger than what's imposed right now.
See, it depends. See the way Fed, hiked rate yesterday, and they have, given indications that there would be further rate hikes. So we see dollar appreciating, right? So there would be obviously pressure on rupee. So it may happen that the rupee may hit 74 as well. And also, the way the markets are behaving, there are FII outflows, and if you talk on the returns for FIIs, say the FIIs who have invested in rupee terms or in dollar terms,
10-12% fall already.
Yeah, so the whole thing, I think the things are spiraling one after the other. So in the short run, may have a lot of negative impact.
Just if I link that with the broader market action, then you're saying that definitely this fear is also warranted in a way, and that contagion risk can in fact lead us much lower than where we are at currently.
It looks like that way. Even if you see the the kind of carnage which is happening on the stocks, you see majorly for the last 6 months or so, the positions were built up in financial services and consumptions. Now, when on one fine day you find one of the leading financial services company cracking by more than 40%, any investor's portfolio get disrupted. And for a broking house like ours, we also have a risk management system in place. So if the margins are not recovered from other stocks, then the other sector stocks are being sold, so that contagion effect is going on. And what we see, right, there is hardly any rollover happening. So that again, signals a fear that the market in the new series may even fall further.
Which brings me to the next question then. In terms of what happens to sectoral allocations, or in terms of, like you said, there is some selling pressure, you have to sell, and the instinct is usually to go for ones that have already given you good gains, which means that high beta will be at risk. Again, more financial names would come to the fore, maybe some of the FMCG stocks which have been running very high.
Yes.
So could that be the next leg of the sell-off is what I'm trying to understand.
If the market doesn't sustain at this levels, the only thing which I see which can, stimulate a market and market can reverse from here is the falling crude oil prices. So which doesn't seem to be a immediate, action. So if that does not happen, I think, the fear would rather continue in the next series as well. And we may see 10,600, maybe next week if things doesn't improve.
Okay.
All right.